Virgin Galactic went through a 20-for-1 stock split over the weekend. That was really intended to get the company back above the $1 limit that you have to be a fully traded stock on the market. So more of a technical thing than anything else. But the market did not react positively. Shares were down about 15% on Monday. And the market cap has gotten extremely low compared to the cash that's on the balance sheet. So I want to dig through some of the numbers here and how investors should be thinking about this, because I did a video recently that said that we're now in this waiting phase for Virgin Galactic, but it doesn't seem like the market has a lot of patience for waiting for the next 2 years. So does that present an opportunity for long-term investors or not? That's what I'm going to kind of dig through today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first look at the stock price. And here you can see that shares are down 14.6%. This market cap is actually not correct. I'll get to that in just a second, but this does not include the 20-for-1 stock split. So if we were at the old price, it would be about 55 cents per share. So this is the weighted average shares outstanding. This is as of the end of the quarter, the first quarter, March 31st, 2024. You can see that there was 400 million shares outstanding. That means that today there's only about 20 million shares outstanding at $11.70 per share. That means the market cap is only about $234 million. Why is that important? Well, let's go to the balance sheet. This is cash flow and the balance sheet as of March 31st, 2024. You can see here $867 million worth of cash on the balance sheet, more than 3 times the market cap of the company right now. In theory, Virgin Galactic could say, you know what, we're just going to close up shop. We're going to sell all of our assets and we're just going to liquidate what we have to investors. That would be something that the company could do. It doesn't appear that that's on the table right now, but something to think about from a value perspective. There was negative cash flow in the quarter of $126 million, and they're expecting another $110 to $120 million of negative cash flow for the second quarter. There was another flight that happened a couple of weeks ago. So those are relatively costly from a free cash flow perspective. And then they're going to reduce their staffing in New Mexico to a very, very minimal level and focus just on the capital expenditures primarily to build out the Delta class spacecraft. So that's kind of where we sit right now. And the interesting thing is where the stock is trading, what the market cap value is for the company compared to the cash that's on the balance sheet. Now, I will say this isn't just about cash. There is $418 million of debt on the balance sheet. So that's something that we need to think about as well. That comes due in 2027. So that would be after they get to the point where space flights are actually launching and they're theoretically at or close to some sort of a positive free cash flow or break-even point from a cash perspective. Now, the activity that's going to go on over the next couple of years, and if you follow Virgin Galactic closely, you know this is the assembly facility for their Delta class spacecraft. They're going to be building 2 Delta class spacecraft. This is the interior mock-up that they're going to have, and they're going to be doing ground testing starting next year. So they have the aircraft designed, parts are starting to be built and delivered. Now the next step is to do ground testing, and then eventually later next year would be flight testing as well. But this is a long time to wait to get to the promised land, which is this point right here, actually having 3 aircraft that are going to be running. So this is the mothership. This carries the Delta class spacecraft. There are going to be 6 seats in each of these Delta class, $600,000 per seat. That's not something that they'll realize right away because there are about 700 people in line that have reservations at a lower price point than that. The contribution margin would be about 75%. So in theory, this could be a pretty profitable business just with these 2 spacecraft. Management even said recently that once they get to having 4 in operation, that you would want to have 4 in operation and then have 1 spare. That would get you to about $1 billion run rate just with the facility that they already have existing in New Mexico. So that's the upside. The problem is that's at least 2 years, if not 3 years away, if all goes well, if everything goes according to plan. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So this is where you get to what I think of as the asymmetric opportunity with Virgin Galactic. You know what the downside is. The downside is 0, that the stock just continues to fall. There's some sort of delay in the production of Delta or actually getting the aircraft off the ground, and the company just simply runs out of money. I think that there is a reasonable chance that the company actually succeeds and gets everything off the ground as planned. Delta is not a complete rethink of the spacecraft. So the risk for building Delta is not necessarily as high as it was from just building Unity in the first place. So that's really the way to think about it, is from a risk reward perspective. Yes, this stock could absolutely go to zero. But if the company succeeds in getting to the point where they're generating $450 million in revenue on an annual basis, generating 75% contribution margin, now you get to the point where this is a free cash flow positive company. They're able to actually fund the third and fourth Delta spacecraft. You're able to open up reservations, which is going to bring more cash into the system. You can see this flywheel really turning and this company being worth several billion dollars. Given the market cap today of a $200 to $300 million, that's tremendous upside. And that's really what I'm thinking about, is what needs to happen between now and 2 years from now when we would actually see that upside taking place. I would love to see some sort of path forward to building the third and fourth Delta spacecraft. I know that's not really in the cards right now, and it's probably not feasible for them to build all four at once. So that's something they're going to probably sequence. But that's the kind of thing where if there is upside, let's see the huge upside for the stock. But the other thing is that if the market just isn't interested in buying a stock where the upside is 2 years from now, that is a potential opportunity for investors, because there's a number of things that management could do. They could look for a sale for somebody who's interested in buying this company, getting the cash that's on the balance sheet, and kind of coming out ahead with all of the upside for the acquiring company. So that's something we've seen with some of these SPACs that's happened before. Not sure if that's going to happen, but that is a potential way out for Virgin Galactic. The other thing is the company could just execute on everything that it's doing right now. And if that happens, that's where I have called this a stock that could easily 10x, potentially even 100x from where it is today, if it's successful. If this vision of building out the New Mexico facility, having 4 or 5 spacecraft, flying every single day, so generating $3 to $5 million every single day from that facility. You also have plans to build a hotel and basically an event hosting facility. They have space for that near the New Mexico facility. So a lot of potential upside for Virgin Galactic. The challenge is you have to wait, and the market doesn't seem like it's interested in waiting right now. So that's the real waiting game right now. And until we get some sort of catalyst, and I don't know when that would actually happen, because the real catalyst is almost 2 years away when commercial space flights launch, this stock may just continue to bounce at this lower and lower level. So that time compression from today to when commercial spacecraft launching, I think, is really the upside that we need to look for. But I'm not sure when the market is going to start to see that upside is actually on the horizon. Not yet a stock that I am adding in the asymmetric portfolio, but I'm definitely thinking about it, because the cash level that's currently on hand, yes, there is a significant cash burn, but this just shows what the upside is with the market cap as low as it is today. Because if Virgin Galactic is successful, this is going to be a company worth many, many multiple times what it is today. So I like that asymmetric return. 0 is absolutely a possibility, but so is 10x or even more. So let me know what you think about Virgin Galactic today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.